Amid the coronavirus pandemic, AM Best is revising its outlook to negative for Japan's life insurance market. I'm John Weber for AM Best TV, and I'm speaking today with Jason Shum, an analyst in the AM Best Hong Kong office. And Jason, what's the reason for the negative revision?
Actually, for Japanese life insurance companies, up until fiscal year 2018, most of the companies had performed pretty well and stable. But since the first half of fiscal year 2019, the situation started to change and major players started to see their core profits coming under pressure. There are a few reasons that we have identified. One of them is premium rate adjustments following the updates of the standard mortality table in 2018. And also in 2019, interest income also started to come under pressure. And that was because a number of central banks in the world started to lower their interest rates. And last but not least, the outbreak of COVID-19. And at this stage, we believe that the outbreak of COVID-19 has not only pressured the results for the first half, but it may continue to affect the second half and even possibly next year as well. So in light of this potential implication on prospective operating performance, we have decided to revise the outlook from stable to negative.
So Jason, it sounds like beyond the pandemic, there are reasons for the revised outlook.
Yes, if you look at just the direct impact of the pandemic, it would only be affecting the mortality experience, which at this stage, based on the numbers, we don't think that it's too material. But unfortunately, the potential impact of the pandemic may go far beyond just death rates. Actually, it can affect other aspects of insurance business as well, such as future new business and also potential investment returns. For future new business, for example, under the current investment climate, which is subject to a lot more uncertainties and higher potential for volatility, insurance companies are expected to face greater challenges to come up with attractive and profitable saving products for its clients in Japan. And also, if Japan slips back into recession or even deflation, it's not going to help the sales of even the non-saving type products. In terms of investment, which is a major piece for life insurance companies, since 2000 and facing the negative rates in Japan, a lot of insurance companies have been investing more and more in foreign securities in recent years in order to increase their returns. But since the outbreak of COVID-19, global interest rates have come down quite a lot, and given the elevated hedging costs, investment managers in Japan may find it difficult to find investments that can sustain their previous investment returns. So yes, indeed, although there's an impact from the pandemic and mortality rate experience, we also have taken into account of other factors such as potential investment returns and also future new business premiums.
Now, Jason, you mentioned interest rates. How much is the prolonged low interest rate environment impacting on Japanese life insurers?
I would say the impact is moderate, but probably would not be as severe as insurance companies that are operating in other developed markets. And there are two main reasons for that. The first one is Japanese life insurance had been operating under ultra low interest rate environment for decades. And also, they have been operating under negative yields at home since 2016. So actually, their business strategy and business model are probably better suited to navigate through the current ultra-low interest rate environments. And also, if you look at their investment allocation, actually less than 1/3 or even less than 1/4 of their investments are in foreign securities. So they are less exposed to interest rate changes or the impact of that than insurance companies that are probably more exposed to US and Europe. The potential impact of prolonged low interest rate environment definitely would be negative if both domestic and foreign interest rates remain pretty low. And the longer it stays low, the more harmful it is for the industry's long-term profitability and financial soundness.
So do you see any bright spots for Japan's life insurance market?
In terms of balance sheet strength, I would say insurance companies are still pretty well capitalized, and most of the major players still have a large in-force portfolio that can allow them to generate positive core profits in the foreseeable future. Definitely, generating profitable future new business premiums is going to be a lot more challenging than before. But I think companies will accelerate the efforts to improve their cost efficiency and upselling, cross-selling to improve their premium revenue, and possibly putting into more efforts into innovation to build a more sustainable model, even under these circumstances. And I do think that some of these initiatives would be able to allow them to mitigate or offset some of the pressure coming out from the external environments.
Thanks, Jason.
Thank you, John.
That was Jason Shum, an analyst in the AM Best Hong Kong office. You can find the full report online at ambest.com. For AM Best TV, I'm John Weber.